How you doing, everybody? It's me, Max Farrow from DexFXMarkets.com. In this video, I'm going to talk to you more in depth on what we refer to as the market price, the price that we're choosing for the 3565, and why we've chosen to do that here on this particular system. But in order to do so, I need to kind of dive down a little bit about what the charting system is and all that stuff, just so you have an idea. You don't have to worry about keeping all this stuff in your brain. I got it for you, okay? But I'm going to jump over to this system. This is our Dex Atomic X. This is the one that chooses the signals. Now, in this process, there is what we refer to as a risk type: high risk, medium risk, and low risk. In this particular box, what we refer to as a HILT, which is the high, low, over time, right? So HILT. The level that you see there, that little level that we have a line at, this is the line that, like that signal that we just did for the USD/JPY, is sitting at. This is the medium risk. If I wanted to go high risk, this means that it would go down into the trade more. And if I chose low risk, it would go all the way up. So in between this zone, depending on where the price starts at the beginning of the signal, it depends on what deviational value that it sits in. So you have a high, a medium, and a low risk opportunity. Now, these will correspond to different levels that are over on Nadex. Okay, so like this particular trade, the Euro USD or the USD CHF that we just got into at 88.70, okay, the actual signal was something different, if you remember. USD CHF was at 88.69. So that's the medium risk line. So if we, because it's on a sell, which means going down, we chose, because it's 88.69, we chose this 88.70, a little bit higher, to be the medium risk. If you went up one trade, which would be pretty close to being low risk, and if you went down into it, this would be more high risk. Okay, so keep that in mind. But as we're choosing the proper statement prices, okay, that's one thing. The next is to choose what we refer to as the market price. The statement price being 88.62, 88.66. The market price being over here, what we choose for us to put our working order on. Now, why was it important for me to tell you about the statement prices and the market prices? Well, if we jump back over to, let's just go to our example online, the USD CHF. Let me flick back and forth here because sometimes that happens. There we go. Okay. And we're going to go to the medium risk. This is where we are at in our signal. As you see, 88.69. We went up to 88.70. That was not too bad. We're not going to discuss looking left and doing all that stuff and the experiences what people have with this bot, which is amazing, by the way, this indicator. Okay. But the price, you see 88.67 right about there, 88.70. Okay, it needs to get, this price needs to get pretty close to the 88.70 mark, okay, in order for it to fill. The more that you try to gain in profit, the closer it needs to get to your statement price. I hope that makes sense. The more you put in profit, so right now we're looking for $35 profit, you need to get between 2 to 3 pips to the actual statement price of 88.70. Now it got down to 88.67, pretty close, but sometimes it needs to get just a little bit closer on the older pairs, the secondary pairs, okay, depending on how flash the market is. So 2 to 3 pips from that price, okay. Now, the less you're looking for profit, the more pips you can get closer to. So let's just say we went down to $20 on either side. So you'd be 20.80. That means that you're risking $80. And that's a pretty much market industry standard out there for other companies, but we don't follow that rule. But so you could actually probably get in 4 or 5 pips away and easily get into that trade. Some people are using 33.67. Some people are using less. So, or they're trying to make more money in the trade. So they go 37.63. But again, the more that you come in, the more you try to make per trade, the closer you need to get for it to break. Okay. All right. Like in this particular example, we have a buy signal here. And as the price comes down, it came pretty close here. Okay, 88.70, 88.69. The trade would have gotten bought here at 35.65, easily enough. Probably even way back up here, since this was 88.68 and this is 88.71. Probably somewhere right around in here the trade would have gotten purchased, and it would have went from working orders to positions. And as it does its thing, it ends up winning, being above. Now, if you had had it for $50, and $50 on one side, $50 on the other side, you would have gotten as soon as it would have touched the line. We call that going at ATM, at the money. When you're inside your trade, it's called in the money. And when it breaks out like it did here, this is called out of the money. Sometimes it's really good to watch your trade on what it's doing and knowing the success rate of your pair to get OTM prices. But we won't talk about that here. That's more of an advanced training style that you get with the DEX effects and all the other network solutions that we have and that training. Right now, you're just looking to follow signals. So as a breakdown of what we're discussing here, the 35.65 buying situation with the medium risk trade seems to be the best success rates. It can come within 2 to 3 pips to the price and get purchased. And that's what you really want. You want to get purchased. You want it to do its job. The more money you try to make per trade, if I were to put in $50 here, I know that the pair now needs to get really, really super close, if not break over the 88.70 price. Okay? So it's not something that you should entangle with too much in the very beginning. In the very beginning, just stay 35.65 and look for your result as you build out your consistency value. Okay? So keep that in mind as you're training. To keep the price 35.65, just keep it at that point. Once you get past the consistency of getting it on and proper, you'll then start looking at profit margins on particular pairs that you've made by keeping your journal, which we'll talk about next in the next videos to come. I'm Max Farrell. This is DEX Effects Markets. I look forward to seeing you inside, and as always, trade well.